I'm Luke, and I'm a chartered tax advisor, and we are here to make the complicated simple. Today, I'm going to speak briefly about dividends and directors' loans. If you run a limited company, you're probably already familiar with the fact that you have to have sufficient profits to pay out a dividend. The reason for this is that the Companies Act 2006 prevents companies from distributing a dividend if you don't have sufficient profits. This is to protect creditors, where companies owe out money and business owners can't pay out profits that the company doesn't have, or pay out funds the company doesn't have. If you have paid out a director's loan that you can't report as a dividend because you don't have sufficient profits, so you've extracted too much from the company, and you owe that director's loan back to the company, if that is still outstanding at your year end and 9 months passes, HMRC will charge something called a Section 455 charge. What that means is, on that director's loan that's outstanding, they will apply a rate of 33.75% in addition to any other corporation tax that you've had to pay. So not only will you have to pay the 19% corporation tax, which could rise up to 25% depending on the level of your income, but also you could be subject to this Section 455 charge of 33.75%. You're subject to this in particular if you have a lot of creditors, because if you have a lot of creditors, they will eat into your accumulated profits on your balance sheet. So a really simple example, let's say I had 10K income, which fed through to 10K in my cash at bank. If I owed out 5,000 to a creditor or a loan, the balance sheet would only show 5,000 accumulated profits that would be eligible for distribution, which would mean if I paid out the full 10,000 and didn't pay back my creditor, 5,000 would be reported as a dividend and 5,000 would be reported as a director's loan. Now, if that's still outstanding 9 months after year end, HMRC will charge me 33.75%. If I pay the loan back to my company, or I have sufficient profits in the next period, I can report that as a salary or as a dividend and write that off and then get back my Section 455 charge, or potentially not pay it if you haven't submitted the return yet and it's within 9 months. But hopefully that brings some clarity to that. And it is a bit of a confusing concept, but that is how the Section 455 charge works. And if your accountant has told you that you have that charge and you wanted to know what it was, hopefully this has brought some clarity.